How's it going, guys? So we're going to talk about one of the most important rules is risk to reward and risk management. So we're going to go into a full detailed video on this. This is the most important thing you're going to learn. Why? It doesn't matter how good your entries are. It doesn't matter how good your stop loss and take profits are. If your risk to reward and your risk management is bad. So we're going to talk about the benefits of risk reward, and we're going to talk about the benefits of risk management and why they're important. And then I'll show you guys how to make it very simple for yourselves. So we're going to start with risk to reward. What is risk to reward? That's where you put your stop loss in correlation to your take profit. Now, there are some people do one-on-ones, and there's nothing wrong with all of them except one of them. So some people do one-on-ones, meaning they risk, for example, 30 pips to gain 30 pips. Some people risk, for example, 30 pips to gain 60 pips. That would be called a 1-to-2. That means they're risking, they're going for, their risk is 1 compared to their reward is twice as much, so 1-to-2. Or they risk 1-to-3, meaning their risk is 1 and their reward is 3 times better. Now, some people risk is 2-to-1, meaning that they're risking, for example, 30 pips to gain 20 pips. Or, for example, in this one, this is risking 30 pips to gain 10 pips. So that's risking a 3-to-1 versus a 1-to-3. This is not what you guys do. So what you want to do, and I apologize if y'all hear my dog barking, but you know, it is what it is, right? We're here to learn. So what we want to do, guys, is you want to figure out which one works for you. Now, the benefits to a 1-to-1 ratio is it's easier to hit your take profit, right? So it can go here and it can hit here. Versus, and then sometimes what can happen on these scenarios is it can go here, hit this, turn around, and then hit your stop loss. Or it can go here. Hit your stop loss. And it's easy to hit this because you're not doing anything, right? So why wouldn't you want this over one of these three or this one? Well, it's very simple, guys. Let's say that we're going to give all 3 scenarios. We're going to go for 10 wins. We're going to have 10 trades. And we'll go for 5 wins. We're going to do a 50% trader. And 5 losing trades. Now, we're going to do $1 a pip. Now, if we did $1 per pip, for example, that means we're risking 30%. So if we're risking 30%, that means that what is 30% of $1,000? That means $30. So we're risking $30 on every trade. Now, our wins are going to be different every time, but basically we're going to do $1 per pip. So we're going to do each scenario one by one. Now, let's say that we took this trade, we won 5 times and we lost 5 times. How much money did we make? We're going to put it at the bottom. So we'll bring our calculator up. So if we won 5 times, we made $30 every trade. So 30 times 5 is 150 bucks. We lost 5 times also. So 30 times 5 is $150 loss. So how much did we make? $0. Negative is $0. So it's a break even, not too bad. And we're gonna get back to why it still could be a good one. Let's do this one. Calculator. We won every time we won $1 a trade, so we won $60 every trade. So 60 times 5 is 300. We lost $150 as we know already. So 300 minus 150, we did 150 bucks. So we made 15% of our money. Remember, 10% could change your life. So 1 and 2 can already be good. Just being a 50% trader, you can do 10 trades and still do 15%, 150 profit. Now, let's go to this one. We get it's $90 every time you win. So 90, because we're going for 3 times the profit. So we're risking 30. We're going for 90 pips. $90 times 5 is 450 minus 150. It's $300 profit. That made us 30% at a 50% win rate. Which was 30%. Now, let's do this one. We win $10 every trade. $10 times 5 is $50 minus 150. Losses were negative 100. So, with this type of trading, you need to be 60% correct to be in profit. With this style of trading, to be in profit, I believe you need to be, let me see, 1 to 2. If I had lost 10 times, let's say I lost 10 times and I only won 5. So we went 30 times 10 is 300. 60 times 5 is 300. So this would be if you need to win at least one more time. So we'll keep it like this to keep it simple. Instead of going on percentages to keep it simple, out of every, you need to win 6 out of, you need to win at least more than 50%. So basically, I guess if we had to, basically 60%. We just say 60% to keep it simple. But you get my point, though, right? So basically, even with this one, even if you want, let's say you lost 10 trades, you can lose 10 trades, win 6 trades. So that would make you a 40% trader. So you can be a 40% trader and still be in profit. With this one, you can be about a 20% trader and be in profit. Over here, so you need to win 60% of the time right here to be in profit, 40% of the time right here to be in profit, 20% of the time right here to be in profit, and right here you have to be off this scenario to even break even. If we took 10 trades times 30, that's $300 loss. 300 divided by 10, 30 trades. So you have to be pretty much a 300% winner. You need to win 300% of the time. Actually, 310% of the time to be a profitable trader. So, question: who's been this person? Where you win, and one loss mess you all up. Another loss mess you all up again. Versus, you could be this person, or this person. If you feel like you can win 60% of the time doing this is totally fine. If you feel like, you know what, I'd rather have that leeway room where I can lose sometimes, 40% of the time, or 20% of the time. So let's just do some scenarios, right? Off the trend entry. So remove drawing. If you had took this trade short, let's say our stop loss is right here. We'll say 30 pips every time. So right here, you were the one for the 1 and 2. You were the one 1 and 3. You were the one, regardless, right? I think we pretty much see this regardless of having to put it up on every one of them. But as you can see, there's nothing wrong with being at 3%. I mean, going for 3 times the risk. You would have won that trade. You would have won that trade. You would have lost that trade. But here's another thing that you need to think of. Let's say we took this trade, right? For this buy. And this is about 1%. This is about 1 to 1, right? We'll say this is 1 to 1. Once your trade gets here to this 1 to 1, you move your stop loss to break even. So it was here. You start your trade right here. Once it gets to 1 to 1, you move your stop loss to break even. So if the market comes back down, you broke even. And all you do is wait for the market to come back here, and you just do your stop loss. You do the scenario all over again. So you say so once the market comes back into your entry like this, let's say it came up, came down, broke you even. Cool, you didn't hit your 1 to 3. So what you do is it comes back up, comes back in, come back in, you enter here, do the same scenario. You get your 30 pips, you get your 1 to 3. And now guess what? Now you're even more profit. Now your stop loss, you move your stop loss not from just break even, but you can move your stop loss to around here. Because you're not in profit. So you say, you know what? I like the profits I'm in. Let me hold it. So worst case scenario, we'll put it from here to once it gets to 1 to 1 to break even. Once it goes from to 1 to 2, you move from here to 1 to 1. So worst case scenario, it comes in, comes down, breaks you even, or goes up to your 1 to 3. So you win regardless, either 10 pips or 90 pips. I'm not 10 pips, 30 pips or 90 pips. And guess what? If you only do hit this 30 pips, if it comes back in here and you really believe in this trade, you enter again to try to get that 90 pips. So the break even, the 30 pips in profit, and the re-entry is going to be your best friend. Now, the last thing I want to talk to you guys about is one more thing. So you're always not going to have 30 pip stop loss. So for example, sometimes you're going to have a 30 pip stop loss. Sometimes you're going to have a 10 pip stop loss. Sometimes you're going to have a 60 pip stop loss. So how do you still risk 1 to 3% per trade depending on your stop loss? Let's dive into that. Hey guys, so we went over risk to reward and why it's important, but your risk is always going to be different. So you might have a 10 pip stop loss, you might have a 30 pip stop loss, you might have a 60 pip stop loss. It depends on market structure, your highs and your lows. You know, you might want to put the stop loss right below this. You might want to put it right below here. You might want to put it all the way down here. You know, it's whatever. But you still, at the end of the day, guys, only want to risk 1 to 2 to 3%. So I'm going to explain which one you should pick after this, between the 1, 2, 3%. But first, let's focus on just 3% and how you can still lose $30 regardless of what stop loss you have. So we have $1,000 account, and we're going to use this 30 pip stop loss as an example. So we have a 30 pip stop loss, and we're all aiming for the same amount of pips, like around like 100 pips or whatever. And with this one, I need to be risking $30. Let's say that we're all aiming for 100 pips on each of these, right? 100 pips. So it's all good risk reward, right? But we're all risking $30 on every trade. So if I'm risking $1 a pip on this, which is a 0.10, if I lose $30. But if I win, I made $100. Very simple, right? Now, let's use this as an example. This is a 60 pip stop loss. If I did $1 a pip on this, I would lose $60 because $1 times 60 is $60. So how do I counteract that? I have to do half the lot size, so 0.05, which is 50 cents a pip. So if I did 50 cents a pip, I would make $50 on this trade. Now, this is a 10 pip stop loss. I don't want to do $1 a pip because I'll lose only $10. I don't want to do 50 cents a pip because I'll only lose $5. I want to lose $30 at most, right? That's why I'm willing to risk. So what do? I can do a 0.30, which is $3 a pip. And if I win, I made $300. So basically my point is this, guys. The higher your stop loss, the more you can make. The farther your stop loss, the less you can make. So I always tell people, this is beginner, this is intermediate, this is advanced. You can build your way up. So if you have to make less money to win, at the end of the day, that's totally fine. Just understand the power and a higher stop loss. So the higher your stop loss is, the better. So now I want to kind of go over how do you get these stop losses? How do you figure out how you calculate this the correct way, right? So I'm going to actually show you how to do that really quickly. I want you to download an app called FS Calculator if you haven't yet. So let's remove all these drawings real quick. And let's just use remove drawing. We're going to use a couple of scenarios. So let's look at this trade, right? Let's act like we're going to take this trade. So there's a couple stop losses we can use, right? So let's look at this trade, and we're gonna do our long position tool. And so we're gonna enter around right. They called it here. We're gonna enter around right here. Let's say we enter here. Let's say that our first stop loss was right here, 30 pips. We'll say right here first. We want to do it right where the market was. We always look for reaction levels, right? So right here is a reaction level. You see this area where it's kind of like struggling. So let's say we did it right here. This is one of our stop losses. We don't want to do it right on what reaction level. We want it right below. So we reacted around this area. Let's do it right below here. So, or we could be a little bit more. We'll do it right here. Let me see. This is 24 pips. We might as well give it a clean 30 then, right? So we're right below here. So that's one of our stop losses. And we might do one right below here, and we'll do the stop loss next. So let's say that we're aiming regardless for a 1 to, we'll say we're aiming for a 1 to 1, whatever. Keeping it simple. Now, what is our stop loss going to be if we had a, we'll say, $200,000 account? That'd be a harder thing to calculate, right? $200 account, we're risking 1% this time. What's 1% of $200,000? $2,000 we're going to lose potentially. So I'm going to bring up my FX calculator. Now, what you're going to do with the FX calculator is you're going to go to position size, and you're going to type in the pair, which is GBP USD, and you're going to type in the amount that you have, which is 200,000, and you're going to tell them what you want to risk. So we want to risk 1%. And if you don't know your stop loss, you don't know the stop loss that you have, you can just type in the numbers of the entry. So you could, the entry was right here, 1.37216. My stop loss was 1.36909. Like I said, if you know the stop loss, you just change the stop loss. So we're still risking 2%, $2,000, but we're going to do a 6.5. So a 6.5 lot right here. So we're going to do a 6. Basically, just keep it simple, 6 standard based off this scenario. So if we win this trade off this scenario, our win is $60 a pip times 30. We make $1,800. Now, let's say that we went down to our stop loss right here. This is about 45 pip stop loss. And let's say that we still go for our one-on-one, so we'll probably still make the same amount of money. But let's say we did a 45 pip stop loss. What would our lot size be this time? Well, we have a different stop loss now. Same entry, different stop loss. Our new stop loss is 1.36770. 44 stop loss, like we said, right? That's $4. $40 a pip instead. So what's $40? It's still gonna be the same, I believe. $40 times 45. We still made 1,800 because remember we have to increase our take profit. But if we had kept that at 45 times 30 pips, we would have made 1,350 versus 1,800. The only reason that we can still make 1,800 is now we have to increase our top take profit goal. So that's how you can calculate your lot size. So just to recap, you type in the entry, you find the pair, account size, the risk you want to take, the entry and stop loss. If you already know your stop loss, just pick pips and just type in, like, for example, 30 pip stop loss, and it'll tell you exactly what it is. If it's a 60 pip stop loss, it'll tell you exactly what you need to do. If it's a 10 pip stop loss, but you don't know it, then you just type in the prices that you're on it, and it'll tell you. And what you do is you pick the standard lot. So you wonder which one. I'm going off standard lot, the 100,000 units. Just because, so that's the one you pick. And that's it, guys. It's very, very, very simple. Now, why would you pick 1%, 2%, 3%? That's what we're gonna go over next. Okay, so now we're gonna talk about which risk do you choose and why. Whichever risk you choose, guys, you choose to risk 1% every trade, 2% every trade, 3%. I urge you to just be consistent with how you want to risk your account. You don't want to go from 1% to 3%, and 3% to 2%, then 2% to 1%, then 1% to 4%, 10%. That's how you lose your money. Risk the same amount every time. And remember, your stop loss determines your risk. Your lot size. But your risk also determines what you're going to choose. So that's like one big calculation. So, for example, if I have a 30 pip stop loss, now my risk is going to determine my lot size based off that 30 pip stop loss. So if I did 1% risk with a 30 pip stop loss, I'm on a $1,000 account, I'm risking $10. 2% risk off that 30 pip stop loss on $1,000, I'm risking $20. 3% risk, I'm risking $30. Now, this is what I recommend for people with small accounts, like $2,000, $3,000 or lower, I suggest maybe 3% because you want to make more money than you, because it's small accounts, right? Accounts that are like $5,000 and up, I say 2%. If you're doing prop firm like social funding, FX, FTMO, talent funding, I suggest 1% because they have rules where you can't risk more than 5% a day. You can't lose a certain amount of money at all. So risking 1% would be, or 1% or less would be the obvious goal to do. So prop firms, 1%. Semi-aggressive, 2% for any account 5,000 or higher. 3% for small accounts so you can make some money. Now, I also have a tool called the Trade Manager. And so what the Trade Manager does is, I'm going to show you, it'll be easier. It determines, so instead you have to use the FS calculator, it works in the background, and you can tell it what risk you want. And so anytime you put a 0.01 on your phone, it closes that trade and puts the correct risk. So I'll give you an example.
How's it going, guys?
So I'm not going to play the audio. I just want to show you how it works. So watch this. I take the trade. You pick the trade you want. You put in 0.01, right? And you put your stop loss in. Once you put your stop loss in, it gave me the correct lot size for that account of 0.31. Now if we go to FS calculator and we type in the risk that we did, it will give us the same lot size. Right there, see, give us the same lot size. So you can use this tool instead of using FS calculator. If you want, you can set up the Trade Manager tool, and you can put in 0.01, and it will say, okay, the bot will say, okay, it told me every time I take a trade, based off the balance, it wants to risk 1% every trade, 2%, 3% every trade. So it does all the calculations for you basically. You don't do anything but put in 0.01, and it works from your phone or computer. So this saves you a lot of time. All you have to do is know your stop loss, put in 0.01, and it will close that 0.01 in half a second. You'll lose like 5 cents or 1 cent, but it's the convenience of not having to do it yourself. And so you can learn how to do that under here or in our members lounge. Now you do have to be an active member of FX Social to use the Trade Manager V5. So if you're not an active member, become an active member, or you're inactive, become active again. And so this is the risk management guide. So make sure you go to the next section where we're going to go through our advanced education, where you're going to learn even more strategies. You're going to learn smart money through our members lounge, and you're going to learn a lot of other concepts. But I always tell people, as you're going through our beginner's education, go through it several times, because you can actually become a 10% trader just using our tools right here. When it tells you to sell, tells you to buy, as long as you follow these rules all day, you can be a 10%, 20%, 30% trader a week just off this strategy alone. The rest of the stuff that you learn after this is just to help you expand your mindset and help you understand the market structure even more. Smart money is going to help you understand the market even more, so you can avoid even more losing trades, because you're going to lose regardless, right? But the more you can avoid, the better. But if all you want to know is how to use the trend entry, and you went through our beginners course, you will be still great. So before you go through this, let's just kind of talk about, give you some life goals, right? Let's say you become funded with a prop firm, right? Our prop firm is www.socialfundingfx.com. So we start off with a $50,000 to $200,000 account, right? Let's assume you do $200,000. Now, let's assume that you are a 1 to 2 trader. So if we're doing a 1 to 2 and we're doing 1%, let's assume that every time we lose $2,000, and every time we win $4,000. So we lose. That's that we win 50% of the time. So 10 wins, 5 wins, 5 losing trades. Five winning trades, 5 times 4,000 minus 5 times 2,000 is 10,000. That's $10,000 profit for the week on 10 trades. That's a 10%. That's a 5% gain. Let's say that we average 5% per week. And let's say that, that social funding pays out every 2 weeks. So 5% a week, that's 10% every 2 weeks, 40% every 4 weeks, right? Simple math. That means that every week, every 2 weeks you get paid, you're going to make $14,000 per month. So you do 10 trades a week, you win 50% of the time, you make $14,000 a week. No, not my bad. $14,000 over 2 weeks. 14,000 times 2. $28,000 a month. So get good at 1 to 2 risks. Let's look at a couple of these real quick. If we just clearly mark this up really quickly, it's using our strategy. Let's say that our stop loss is down here because we've seen this. So we want to do a 1 to 2. We have a 50 pip stop loss, so we need to be aiming for 100 pips. Did we win that trade? Absolutely. We only following our rules. We wouldn't have took this trade. Let's do this trade right here. Our stop loss now is right here. So our take profit should be twice as far. Or 2 times as far. Did we win this trade? Yes. Let's look at one more. I know I shouldn't have to mark this up because it's clear as day, but what was our stop loss? Right here. So we go for 60 pips. We won this trade. So we won 3 trades in a row. If you won all 5 trades in a row, right, no losing trades, 4,000 times 5, you're done for the week. You don't even have to do, you only do 10 trades if you lose 5 other times. If you win just 5 trades in a row off of 1 to 2 risks, you making $14,000 per month. We're just factoring in if you lose. So 5 winning trades in a row consecutively, like we just did, you made money. So hopefully this video helped, guys. Risk management and risk reward is super important. That's why I made it the longest video. In the last video before we enter the advanced course, keep going through our beginners course. If you're in our members lounge, we have a lot of training in our members lounge. We also have our signals group where we offer copy and paste signals, but we don't like people to use that as a crutch. So yes, we have our chart your skills group, our premium chat. We have multiple signal groups where we discuss trades and we send out signals in multiple groups. And another tip is you don't rely on just our signals. Use them as an alert to go check it. So you know what, I agree, but you're never gonna agree unless you go through our basic education first. We have our US 30 trades only. So we have a lot of different signals groups. And I suggest also do not go and try to copy all of these people. Find who you think is your favorite channel, maybe 1 or 2 people. A lot of people like Chart and Chill, and go through that. So keep going through our basic education. Go through our Chart and Chill. Make sure you set your automation also, so you have something trading in the background. So if you go here, this is where you can have it set up for automation. And I would suggest only picking one channel. And so we gave you everything FX Social you need, guys. We gave you the automation. We're giving you great education. We're giving you great signals. We're giving you a community where you can actually talk if you decide to be one of our premium members. And we're giving you an indicator that's ridiculously accurate. We give you everything you need, guys. Hopefully this video has helped you. I'm sorry it's so long, but I thought it was very necessary.